Hello, welcome to Save US Taxes Legally. I want to start off with three simple questions. Number one, do you want to leave a legacy for future generations? Put yes or no in the chat. Number two, do you want to keep all your information completely, all your information that nobody knows what you do? If it's yes or no in the chat. The third question, do you want to save US taxes year after year, generation after generations? Again, put yes or no into chat. Imagine saving 4, 5, 6 figures in taxes every single year. The money you save, you could put back into your business. You could buy more investments. You could pay off your mortgage. You could buy a new vehicle, take your family on a well-deserved vacation, give to your favorite charity, or save for your retirement. Imagine nobody knows what you own, where you own it, how much you own, what you do with it, and when you sell it. Imagine all of a sudden, I can't stop you from being sued, but all lawsuits become frivolous and go away. How much time, anxiety, money, worry just disappear. I believe every single US investor, US business owner, US entrepreneur, US franchisee owner, and US 1099 income earner needs to know this information. It's not taught in schools. I also believe that since I learned the secret of the rich, it's my duty and my honor to teach this to others. If I kept this as a secret, I would not be doing, that's just not fair. I also believe that the playing field must be leveled for all businesses. The Amazons of the world get free land. My brother lost his brewery because the rents went too high. That's not fair. Welcome to Save US Taxes Legally. My name is Sally Gimmon. I am the owner of www.thetrustisyou.com and also a free class on the Great Discovery. My first name and my last name squished together.com. I'm going to teach you the secret of the rich today. This is in the IRS Tax Code 643B. It's been in front of the United States Supreme Court on 2 separate occasions and won both times. And only the rich know about this. Now, most people, they say taboo subject is death and taxes. So most people have never heard about or know about their tax structure. There's 7 different layers from 10% to 37% to file your taxes and 4 ways to file your taxes. Or there were 4 ways to file your taxes. Very quietly, on January 1st of 2025, the IRS changed how they charge people for taxes. Single is still the most expensive way of going. Then there's head of household when you have children 18 or under in the house and a single parent. Then they made married filing single the same tax rate as married filing separately the same as filing single, all the way up to 37%. And then the cheapest way to file your taxes is married filing jointly. If you're watching this and your CPA is telling you to file separately, please do not listen to him or her. They are not helping you. Case in point, I talked to, this is back in May, I talked to somebody who was doing digital marketing, and he told her to set up her own company and file separately from her husband. How she was going, by the end of the year, it would be over a $4,000 difference if they filed married jointly than if they filed married separately. $4,000 extra. Guess who's going to be a client of mine when she starts making enough money, she said. That's an amazing thing. Now, give you a little bit of history. This comes from England way back when King Henry VIII, that famous king who chopped off his wives' heads, he decided to start the Church of England so he could divorce them. Hey, murder a few ladies, start a church. So he went to go tax the lords and ladies of England to pay for his church. And the lords and ladies of England went further back to the Magna Carta that was in the 13th century. It's contract law that came to the colonies while we were still part of England. Our current tax structure that we are under first went into effect February of 1913. In 1913, the first time ever, the federal government started collecting taxes. It was only supposed to be around for a few years, but we got involved in World War I, and it hasn't stopped. It's only grown since then. The super rich families of 1913, the Rockefellers, the DuPonts, the Carnegies, the Kennedys, made sure they could save taxes. Well, if they can save taxes, we can save taxes. When you Google, and please do, I want you to do as much research as you can. When you Google tax code 643B, you will find an opinion letter that the IRS wrote on September 11th of 2018. From this opinion letter, there are at least 5 different memorandums that come from this opinion letter. They specifically say they do not like tax code 643B, and they do not like the irrevocable, complex, discretionary, non-grantor spendthrift trust. It's their opinion. My opinion, I do not like lima beans. Do not make me eat lima beans. The IRS can say as much as they like about this tax code, or as much as they don't like about this tax code, but only Congress can change the tax code. Too many current presidents, the Kennedys, senators, congresspeople, and their people who are donating to the super PACs know about the secret of the rich, and they won't change it. All Congress is doing is raising taxes on the middle class. So let's go over these 5 elements. You must have these 5 elements to make this work for you. Irrevocable. This goes from generation to generation to generation. The Rockefellers Spendthrift Trust is called the Office. It has been around for 7 generations and has 400 different people under the same EIN, or employee identification number. Each separate family files their own 1041 tax return. Complex. This trust can hold money from day to day, week to week, month to month, year to year, decade to decade, century to centuries. The law firm I work on behalf of was started by a Harvard law professor 77 years ago. Paul Benson wrote 5 very specific trusts to save specific taxes. We're going to talk about 2 of them here today. But they inherited a trust that turned 300 years old in 2023, before we were a country. This is how much case law there is on this. Discretionary. Whoever's a trustee or trustees make the rules for the beneficiaries. The trustee or trustees get to decide who are the beneficiaries and who are not the beneficiaries. There's no contesting the will. There's no infighting. They can do whatever they like. Non-Grantor. This makes the trust completely private. When you start this trust, you're going to have someone who will never be a beneficiary or never be a trustee, who will become the grantor or the settler of the trust. It's not a speed bump. You do need their social security number. They're going to sign up to be the grantor of the trust, and then the next page they're going to sign away from being the non-grantor of the trust. 97% of the trusts sold in the United States are exactly what my mom and dad had and what Susie Orman talks about on PBS television, the family trust or the living trust. When my parents started the family trust, it was not very original. It was called the Gimmon Family Trust. My mom and dad were both the grantors and the settlers of the trust. When they both passed away, that trust dissolved and all their assets had to be split up. This trust never ends. It goes from generation to generation to generation. Worst case scenario, your great-great-grandson in 2095 decides he's going to cancel the EIN, or employee identification number. Why? I don't know. When he cancels the EIN number with the IRS, your great-great-grandson is responsible for any taxes saved in 2095. He'll have to pay them. Any taxes saved 2094, 2090, 2080, 2025, 2030, any taxes before that, he will never have to pay back. And then the last element, spendthrift, has been in front of the United States Supreme Court on 2 separate occasions, and both times it's won. You can't get more legal than that. So now, we're going to talk about the business trust. This is for all U.S. business owners, entrepreneurs, franchisee owners, and 1099 income earners. If you're making at least $100,000 gross per year, you will be saving 5 figures in taxes. This is one of my clients. He called me on January 3rd. He was watching me on TikTok. He knew in 2024 he made $150,000 in 1099 income. He's a salesman in Virginia. He's living in an apartment with 2 roommates and is driving a 10-year-old car. He has nothing to show for the $150,000 he made. If he makes $150,000 again in 2025, he will save at 90% on his federal income taxes, uh, $25,962. Plus, he'll no longer pay Virginia state income taxes of $8,625. So for a full year, he will save $34,587. Per month, if you take that $34,587 and divide it by 12, per month, he's saving $2,882 per month he's not paying in federal and state income taxes. He can do with whatever he wants with this money. He can put it back into his business. He could pay off his mortgage. He could give to his favorite charity, buy a new vehicle, do whatever he wants. His goal in 2026, he's going to use the money he saved as a down payment for a house. Congratulations to him. Now, this is the business trust. Again, Paul Benson wrote 5 specific trusts to save specific money. The business trust is for any 1099 income to save federal and state income taxes. The beneficial trust is for all investors. The mineral rights trust, I've only sold one of those, is when you have coal rights, oil rights, or something else like that. The senior trust, and then also the charitable trust. I don't care which trust you get. The 3 ways you're saving money, remember this. You're saving taxes, you're keeping your information private. The trust will not hold any LLC, S Corp, or C Corp. That's state law or statutory law. When I started my trust, I was in Arizona. That was the Corporation Commission of Arizona. I'm now in North Carolina as a Secretary of State. You do not get to say you do not get to have those in the trust. This is on the federal level, not on the state level. And then finally, I can't stop you from being sued, but all your assets are in the trust, and no one can get a hold of them as a titanium vault, so all lawsuits become frivolous. Now, the reason I found out about the trust, my personal story, I became a real estate investor in 2018 when my mom got sick. My mom and dad drove from Goodyear, Arizona to Charlotte, North Carolina for a wedding. She wasn't feeling well. She went to the emergency room and she was on the ventilator for 13 months. Thank God she got better and came back. She had septic of the blood. I purposely became a real estate investor and I bought a bank-owned reverse mortgage property in July of 2020. In July, all of 2019, with my mentor, I wholesaled 7 bank-owned properties nationwide and then paid off all my debt, $184,000. I'm completely debt-free, and I was a good little real estate investor. I had $50,000 in my bank accounts. COVID happened around March 17th. My mom's from Ireland, so St. Patrick's Day is a very important day for me. And then on April 4th, 2020, my CPA called me to say congratulations. I made so much money when we come back here. I was filing single. I made so much money. I went from 22% tax rate to 24% tax rate. He asked me to come in to make an appointment with him because I owed the federal government $94,000 in short-term capital gains, and I only had $50,000 saved that had nothing else coming in. He put me on a payment plan at an extra cost to work with me to pay off my capital gains. And I started researching for 5 months. I started researching the Rockefellers Spendthrift Trust. If the Rockefellers can save taxes, Sally can save taxes. September of 2020, I started both my business and my beneficial trust. I had the contract on this property. My LLC bought this property. I'm living in Phoenix, and the attorney's in Raleigh, North Carolina. I did 2 bill of sales. I Googled this. I did 2 bill of sales. 1 bill of sale from Sally's real estate team to Sally Gimmon. 2nd bill of sale from Sally Gimmon to my beneficial trust. I drove to the bank, got them notarized. I happened to have $10 in my pocket, handed it to my banker. He made a notation in his notary book and handed it back to me. Go home. I scan both bill of sales, send it to the attorney in Raleigh. Next day, the attorney writes back to me and asks me for the first page of my trust. This is all happening in September of 2020. When it finally went to auction after COVID restrictions on August 28th of 2021, It started at $20,000. Instead of going to $50,000, where I knew I would owe $7,110 at 24% tax rate, it finished at $64,326. Without lifting a hammer, without even looking at the property, I never even looked at the property, I made $44,326. At 24% tax rate, I got to save $10,368.24 on one property. I've done more real estate since then. Now, the beneficial trust is just like the business trust, but instead it's for U.S. investors. You will no longer pay capital gains. You'll no longer pay interest income taxes. You'll no longer pay dividend income taxes. You'll no longer pay rental income taxes, and you'll no longer pay royalty income taxes. Royalty income taxes are not on the screen. They're taxed a little bit less. They still have 7 different layers, but it's from 10% to 35%. So they're taxed a little bit less. I don't care what kind of investing you're doing, but if you make $50,000 in profit, this is how much you would pay per tax bracket. Personally, in 2024, I wholesaled 6 properties. I have 12 notes. I had 3 seller financing houses in 2024. My friend's doing my options trading, and I have 3 rentals. I did not pay any taxes on any of that property. Now, long-term capital gains. Again, when I come back here, is short-term capital gains. Short-term capital gains are a year or less and affect you if you are selling crypto, you are a forex investor, you're day trading, you're doing auction houses, tax liens, wholesaling, or fix and flipping. Long-term capital gains are either a year or more and are either taxed at 15 or 20%. I am not a tax person, so I give you the numbers so you can figure this out. Again, another TikTok, the son saw my TikTok video, reached out to me. His mom and dad were selling a 40-year-old restaurant that Jim and his brothers built. They were selling it for $3 million as is. And when I talked to Jim, I told him at 15%, I would save him $450,000. At 20%, I would save him $600,000. Jim's like, we're selling it in a few days. I need you to talk to our business broker, Sam. Jim gives me Sam's phone number. I call Sam. Sam's like, oh, I can change the contract. That's no problem. He just had to change the names on it. Sam's like, I'm going to make $30,000 on this deal, and I have several other deals happening. I'm going to start the business trust. I tell Sam about my affiliate program. Sam turns around and tells Michael, who's buying this family restaurant, it's going to be his 7th restaurant in 3 different states, about the business trust. Michael's like, I need to save taxes. So Sam made an extra $1,000 because he's an affiliate of mine. Since then, he has sent me more business. If you want to set up a 30-minute tax breakthrough session with me, it's www.thetrustisyou.com/scheduling. My free class on the Great Discovery. If you need to translate this into Mandarin, which I did get a client, if you need to translate this to Spanish, if you need to translate this into 164 different languages, you can do this at the Great Discovery for free. It's www.sallygimmon.com. When you go out to the Great Discovery, you're going to get 3 articles from Forbes magazine I did not write. You're going to get 2 pages of case law so you can research this to your heart's content. And you're going to get examples of clients saving thousands of dollars. My goal is to teach this to as many U.S. business owners, U.S. entrepreneurs, U.S. franchisee owners, and U.S. 1099 income earners who are making at least $100,000 gross, and all U.S. investors. The more you know, the more knowledge you have, the better you'll do. Thank you for coming to my Monday meeting. I hope you come back to hear more. Take care. Bye-bye.